example. Misconfiguration was on one of the edge servers in Capital One that had more access privilege to backend servers, that once it was breached, the attacker was able to reach to a sensitive data and was able to extract a lot of data and records for Capital One users. Other examples are hardware vulnerabilities. They are rare but severe in nature. Intel Spectre is one example, but one that is important is actually the cloud shared vulnerabilities. Cloud computing is widely used today, and we see even central banks looking into cloud computing. But one of the things that needs to be considered is the risk that is posed by these cloud providers and the cloud services that needs to be assessed properly. Cloud bleed is one example where a cloud user can extract sensitive data from other cloud users through the Cloudflare vulnerability that was one on the edge proxy that they had. This is just one example. They were able to extract some private keys, some passwords from that, and shown some examples. Insider threat, I want to show that I gave two examples here. There is intentional insider threat, and there is unintentional insider threat like Anthem. Anthem was an unintentional insider threat that was targeted with a spear phishing attack, and by clicking a link, it propagated an installation of malware and then propagated through the network. The Trade.io was actually an intentional. So dealing with each one is completely different. The way that you deal with these risks, that you put the security controls and you make sure that security is up to date. Now, design and implementation flaw, CoinCheck, and Equifax are big examples, but these are the ones that now are becoming more prominent because the systems are more distributed, they're more interconnected, and they're more complex. So designing and implementation flaws are becoming much more of an issue, exposing components that shouldn't be exposed, putting some components on same segments and not segregating. These are becoming more prominent as we move forward. Now, I'm shifting back to central bank risk management and handing it back to Ashraf here.
Thank you, Majid. And I'll tell you that, you know, I've seen this last slide from Majid now a couple of times in presentations, and every time it surprises me because, you know, you have all these logos of all these different companies and issues that pop up, and you know how he divides it in those four corners. Every time it surprises me that every time we do a presentation, it can be updated further because these issues only keep emerging, and you only have to open a newspaper and you see another cyber or fintech related cyber issue popping up. Now, the thing there is that, you know, you might see names like Marriott, and you see names of Equifax and cloud computing and everything, but you might not necessarily realize how is that relevant for central banks specifically, or the work that I do, or even yourselves. And for me, one of the key things is that, you know, and you might have seen this slide earlier in other presentations as well, is I only look at my own digital wallet. So I open my own smartphone and I see the stuff, and this is directly from my smartphone and what I have installed on my phone, you know, to realize your own exposure to a wide variety of fintech apps. Those could be apps in the realm of digital payments, of online banking, of digital IDs, and also of obviously things like money transferring or trading, or of stocks, as you see a number of icons here. Now, that I think is a wake-up call. If you open your own phone and you realize you have this kind of exposure to all kind of different fintech apps and the related cyber risks, you know, it's not something that's too far away from you. It's right here, right now. And when we go to the next slide, we see right here, right now, also holds for those central banks and financial supervisors that are for all central banks and financial supervisors. So this is just an overview of a couple of headlines of the past weeks and months related to what I call the pervasiveness of fintech. It is everywhere. From the Vietnamese government telling the central bank to start drafting fintech rules, so from a regulation perspective, China outlawing all crypto transactions, though I have to add, I read an interesting headline this morning that now apparently Chinese cabs are going to experiment with the Chinese CBDC. And we have a colleague here, a former colleague of us from the IMF, John Kiff, who actually keeps a daily log of all these kind of news articles related to fintech and CBDCs and what have you more. So maybe, John, I don't know, I'm not trying to make advertisement. I find it very helpful. Maybe you want to share a link for your daily log as well. It's really helpful if you want to keep updated on a day-to-day basis of central bank related fintech developments in every possible area. You can also see that other central banks like the Swedish central bank, who are well known for their CBDC project, might join the Eurosystem payments platform. You see experiments with central banks in the BIS on joint CBDC projects. Obviously, all of us have heard of El Salvador to make Bitcoin legal tender, which I think is now the case also. And other issues like the RBNZ in New Zealand, the Reserve Bank admitting that they had a cybersecurity issue. Central banks deciding or not deciding to have fintech departments within their central bank or supervisor. And obviously a lot of authorities also developing financial innovation hubs. So what does this tell you? This tells you that central banks and financial supervisors are head over heels into fintech developments in every specific form, whether it's rules and regulations, whether it's developing their own central bank digital currency projects, whether it's reshaping their internal organization to deal with fintech in supervision or with fintech in other related areas. So the risk is real. Everything that Majid just flagged, everything that related to other commercial institutions and peoples and processes and technology relates to central banks as well. And I think the key point of our presentation today is most central banks and supervisors are not fully aware of the risk exposure they have when they start engaging in these projects, whether it's CBDC or how they are already engaged in projects and the risk that they run. So if we go to the next slide, and this kind of goes back to what I said at the beginning, central banks do anything and everything, right? So you have, with all these different objectives, you have a lot of what we call strategy and policy risk. Because of central bank mandates being expanded, you get an increasingly broad risk landscape. That's what I mentioned earlier already. With financial risks, very clearly, operational risks, the aspects that Majid also just discussed, and overall strategy and policy risk, which basically means the risk a central bank runs of not being able to perform according to its legal mandate, its strategy, it's implementing its policies because of some of the inherent risk that is embedded in the way it operationalizes its strategy and its policy. If we go to the next slide, I want to zoom in specifically on operational risk, because I think, again, this is where key fintech related and cybersecurity risks have already emerged for central banks. Clearly, as you can see in the red blocks, that holds for IT. Majid discussed issues related to software, developing in-house or externally, hardware aspects, data management, cybersecurity, but also outsourcing in general. Any central bank engaging in a central bank digital currency is likely to work with outside parties, third parties. How dependent are you on them? How much control do you build in? What are you using in terms of software and hardware where there is an increased risk? But also aspects related to project management. So fintech issues, CBDC issues are new for most central banks. So their organizations are not developed or necessarily set up to deal with fintech supervision or with CBDC development or cloud computing issues. So how do you embed that in your organization without turning over your complete organization, turning it into a mess, making issues or creating new issues? That also ties into HR issues. Have you got the right staff, the right expertise? Do you know how to retain that kind of expertise, or are you going to compete with commercial institutions, like is the case for many supervisors already? But also issues related to business continuity management. If you start exploring, let's say, a CBDC, is it going to affect, in a negative sense, your financial market infrastructure in general, your payment systems? Is it going to affect the way the central bank operates as a whole, your cash currency operations? And of course, actually to start with the legal component. Are you allowed to set up a fintech department? Are you allowed to branch into financial inclusion aspects with fintech tools? Are you still complying as a central bank with the laws and regulations that are relevant in your country and that the central bank has in its own regulations. So there's a lot of operational risk that needs to be charted. So if we go to the next slide, that is exactly what we found in our technical assistance with central banks. And again, we've provided this TA to central banks that are currently developing CBDCs, as well as a host of other fintech related issues, exploring cloud computing options and other related issues. Now, what we see in general, if we look at IMF surveillance, so these are the EFSA Article 4s that you might be very well aware of. We find that over the past 25 years, digital risks have always been reflected in IMF surveillance and technical assistance. Most of you probably know the Y2K issue, right? So that was a key issue around before the year 2000 on whether computer systems, including from central banks and supervisors, would be able to deal with the turn from 1999 into 2000. Now, that's just an example, but those technology risks have always been flagged, and they relate, as you can see here, to data and research, the regulatory framework, interagency cooperation, central banks with ministries, with financial supervisors, with other agencies, and clearly with risk and risk management. And what we found is that over the past decades, those issues relate to legacy systems. Central banks don't update their systems continuously, less perhaps than certain commercial institutions. So you face legacy issues. Third-party reliance, you have outside software developers. Now with CBDCs, even more third-party security providers or developers. You have resource constraints because you don't have that much money and resources to allocate. Operational risk in general, as I showed in the previous slide, and reputational risk, especially when you start developing sandboxes and in the area of cybersecurity. And that's where most of our TA focuses on, because central banks are very increasingly aware of those kind of risks. If we go to the next slide, I wanted to zoom a little bit more on CBDC. This is from a paper that Majid and I wrote together with John Kiff and others on operational considerations for a central bank digital currency, and you'll find the paper title right down there, where when we were developing that paper as guidance for central banks that want to explore a central bank digital currency, we found it really helped to build in this flow chart and to kind of tell a central banker, you need to go back to start first and think about what are the objectives if you are exploring, in this case, a retail CBDC that you want to achieve. You also need to design have your design considerations built on those objectives. So what are the key principles? What are the country's specific circumstances that you take into account? Do you have a very developed RTGS, for instance? What's the cash currency demand in a specific country? Do people prefer cash versus, electronic means of payments? And then you get into a host of operational issues, as you can see in block number 3 there. And those are the ones that I just discussed. You need to build in moments for, and those are those green blocks, for assessment and discussion among all key stakeholders. So basically, what we're saying to central bankers here, slow down a little bit. Why? Because, and I hope you forgive me the word choice, but CBDCs and fintech is very sexy, right? Everybody wants to get with it. Everybody wants to explore it. Everybody wants to be the first. I've heard many central bankers tell me that we want to be the first to issue a digital currency, the first who sets this up, the first who explores AI, ML in a specific area. But you also need to build in some room for proper decision-making, for seeing and touching base in your organization with all relevant departments on whether you're on the right course. Because otherwise, those risks, and central banks and supervisors are generally risk-averse, not so much here, if those risks are covered properly. Now, what I'll do next, in the next slide, Majid, please, is I'll shortly shift to a word table. This is actually from a recent TA mission that Majid and I, together with some other central bank colleagues, completed for or with a central bank that is currently experimenting, rolling out, a central bank digital currency. You'll see here, this flowchart comes from our technical assistance report. It's anonymized, where we kind of said, well, from a holistic point of view, if we tie this into risk management, we see that there's strong risk awareness, we see that there's strong risk management, we see that there are a lot of documents in paper, but there could be further improvements in reporting, in operationalizing the 3 lines of defense. I'll just get to that in a bit. And the most important part for the digital component, as you can see here in the yellow block, is that there are were, in our sense, not enough security support and resources for managing digital risks, both related to the CBDC project and in general. And that needed to tie into a more strategic discussion within the central bank. So allow me for 1 second to quickly share. Okay, Majid, I think you might need to stop sharing, then I can share my screen. What I'm going to try and put on screen is a word table from an actual technical assistance report that we've sent to a central bank that is working on a CBDC right now. So this is an IMF document. We've anonymized it, so you cannot see, hopefully, which country or which central bank it is, but it will give you a very good insight into how do we provide, from the IMF sense, technical assistance to central banks, and how detailed is it. Majid, just to check with you, can you see the table clearly?
Yes.
Okay.
It's clear. Thank you.
Excellent. So this is a table, and as I mentioned, it comes directly from a technical assistance report. This is a mission on central bank risk management that Majid and I did together on central bank risk management, but focusing also on components related to fintech, CBDC in particular, and cyber-related risks. And the first thing I want to show you is those yellow bars, and there are 4 of them. I'll just scroll down to see it's a 3-page table of recommendations. So that already tells you we've had a lot of recommendations here. Normally IMF TA recommendations are 1 table. So it already tells you there's a lot of stuff that comes up with this kind of technical assistance on fintech. The first one relates to overall broad issues. We call it central bank governance issues. We'll focus then in a second bar on central bank risk management in general, then zooming in on fintech and cybersecurity issues, and then finally some cross-cutting issues. So to really kind of sandwich our advice on CBDC and on fintech with what I call the contextual issues, those foundations for which risk management is, that are needed for risk management. The green ones are the ones I just wanted to flag to you. So you see we have a column with recommendations, with a priority, a time frame, and a specific lead actor. So we want the central bank to know also whom do we think should start taking the initiative on these specific recommendations. So on governance as a whole, you see that we really put a strong focus on the involvement of the governor and the board for risk management, and especially for risk management of fintech components. Why? Because they need to have control, they need to make the decisions, and they need to be held accountable for whatever activity, whatever fintech or risk-related activity the central bank engages in ex post, right? So there we recommend also that the board should also take steps to increase the effectiveness of individual board members. Board members of central banks, as you know, have a very broad set of expertise, but it's not necessarily always kept up to date with fintech and cybersecurity developments. So additional board effectiveness reviews, and thereby strengthening fit and proper requirements of central bank board members, is very critical. That also means that they need to receive more training. Now, many of you should be able to be in a position where you are hopefully also able to provide that training in-house to your board members, whether it's in board settings or discussions, but also to get external experts to provide training to board members, even if it's to update them on key fintech developments in your jurisdiction, including cybersecurity issues. We put a big role also for the audit and risk committee if the central bank's board has that, because that's where really the critical focus lies at the board level. And then when we zoom in on risk management in general, there are a number of key best practices that we recommend in general. So the chief risk officer should report directly to the governor. Risk management reports in the central bank need to be tailored. As you know, often in any organization, risk reports, have the risk to kind of fall into this bureaucracy trap, where it's just a tick the box kind of what has happened, what kind of incidents have happened, do you report them? And that's really not where you want to be when it comes to risk in general, but also not for fintech and cybersecurity. It also means, as I mentioned here, the 3 lines of defense model needs to be strengthened. I won't go into that now. That's very, generic good practices. But one key recommendation is that if a central bank and a supervisor has a risk management department, and they'll have that likely, the risk management department should be represented at the key committees, including those at the first stages that are involved with CBDC and other fintech-related projects, whether it's on rolling out a cloud computing solution or something else. So risk management needs to be involved at the early stages, not come in at the end, you know, when a lot of things might have